Well, welcome back to another edition of Commodity Chat from Trader PhD. I'm head of market content, Dawson Schmidt. Joining me again for a discussion this week to talk everything commodities, whether it's grains, oilseeds, or even livestock, is Ag Market Advisor Nick Lawrence.
Hello, everyone.
Nick, new week. Last week we concluded the two-day meeting between President Trump, President Xi. I know we saw quite a bit of a sell-off following that meeting, or kind of amid the meeting, just because of the time zone differences. Is just the fact that we were seeing if there was going to be some sort of trade deal that came from the U.S. and China. Doesn't sound like a lot of concrete stuff came out of it during the meeting, but then on Sunday we did get a White House fact sheet saying that China could purchase up to $17 billion worth of agricultural products annually through 2028. And so I think that was really getting a lot of the market's attention here to start the week and kind of trying to break things down as we move forward as to what exactly it means.
Yeah, it would have been nice, obviously, for the market to get that, immediately, concluding the meeting, and that, obviously, that's what the market was looking for, some sort of nugget of information that something was negotiated, I guess, one way or another. And then, the fact that the market got nothing, um, acted as a vacuum to take a um, bunch of price risk out. And so, anyways, that kind of sent the end of last week into a little bit of a tailspin. Yep, and then Sunday night when the market, not only were we oversold, and there's probably going to be some sort of profit taking anyway. To get that fact sheet by the White House kind of just poured a little fuel on that fire and got us up big on Monday.
Yeah. So what was the fact sheet? Again, the US or the White House said that China will purchase at least $17 billion per year of agricultural products in 2026, which that's prorated from what they've already been buying, and then adding that to 2027, 2028. And that's in addition to the soybean purchase commitments that were made in October of 2025. And I think a lot of the assumptions that's coming from that, of course, is looking at, you know, the 25 million metric tons that I guess is supposed to be purchased for 2027 and 2028. I think the last time I looked, China, if they're really going to get happy about it, they would only purchase 20 million metric tons of U.S. soybeans for the current season or this year. They are really behind on that. I think the latest thing that we've seen from the report is that China only has about 12 million metric tons that they purchased from the U.S. that we know of. Of course, there's some unknown sales in there that might get realized, but we're far off from that 20 million metric tons that we could see for this season. So I think we're really hinging on the next season to kind of bring us into kind of a better standing on the export side of things of if this is going to help soybean demand or not. Of course, that 17 billion dollars is not just soybeans; it's also other agricultural products. I think there's a lot of exuberance for like corn purchases, wheat purchases, maybe even some pork, and then of course sorghum that we've been shipping to them recently. But I mean, lots of things that could happen with this $17 billion on top of what we could see as kind of a reversion to, I guess, at least average from what we've seen as our total exports to China.
Yeah. At first, when we first came in Monday, we were chatting back and forth. Does it matter? Does it not matter? Initial reactions were, um, I guess, between me and you on the surface that it may not matter all that much. But then you dug quite a bit deeper. Put the data to it, put the pencil to it, and came up with this nice little graphic here that shows it does prop up sales a bit and um, keeps our industry humming along at a pretty good pace as far as that importer for us. So yeah, on the surface we just kind of weren't sure, but then after you dug a little bit deeper, it seems mildly supportive here over the next couple of years. Yes.
Yeah, I can't tell you how many variations of this chart I've seen
Right.
online between analysts and reporters just trying to, and they all look different. I mean, there's no exact science to this as to in terms of exactly what this is going to look like, because of course this is more speculative as to how much is this going to really boost our stuff. But bringing it back to the farm, of course, is looking at our soybean exports and new crop outstanding sales. We were in this position last year of approaching the next marketing year, and there's barely any soybean purchases, especially from China, on the books. And you look at this new crop year, still again, we're in a similar position. In fact, we're kind of even in a worse position than last year, just getting things kicked off for this upcoming season. So I mean, there's still a lot hinging on the fact of, can we get soybeans to be attractive to China if they're going to really start picking up demand again here moving forward.
Yeah, I mean, but all in all, even though the export sales have dropped, USDA has obviously recognized that, and it's been a one for one shift, into crush essentially.
Hmm.
And so right now, our crush is keeping the ending stocks, the carryout level, kind of from ballooning.
Hmm.
And so now the question, I think, is if our domestic industry and market, etc., um, gets into a good flow of crushing, right? And crush margins are good. We continue to make, renewable diesel, that type of stuff, and all the tax credits that go with that, and all those types of things. What I'm trying to say is, if we expand our crush capacity here, and we get, used to doing that, um, does that make our uh, domestic companies a little bit more tight gripped on our domestic supplies and make it harder to export, which in turn should drive up price? Um, that's kind of what I'm interested in watching, to see how that unfolds here over the next couple of years.
Yeah, really interesting to see that. And we get the next data from the EPA on if we're producing more renewable diesel. Specifically, I think the April numbers should come out this week. Um, and we saw a big bump in March. And so, yeah, I mean, the the biofuel policies that we saw get updated just these last few months was, kind of suggesting that there's a lot of this export demand that we've lost that's being made up for on the crush side of things, wanting to keep it moving here, because it's going to be hard to fully replace China. But again, to your point, it's at least keeping our supplies from swelling.
Yeah, and again, I think, as inflation affects the producer, also not only domestically, but globally. Obviously, there's inflation in South America, just like there is here, and so that not only not only does the market become interested in owning, physical assets that are affected by inflation, but the other side of that is the producer becomes a less willing seller at a lower price generally.
Mhm.
And so does that also um, boost prices a little bit too? I guess it's a little bit more of a tight fisted producer. Um, so that, I think, is going to be interesting as we move forward.
Yeah. I want to wrap up the China discussion though here, is kind of talk about the beef side of things, because yeah, not only was the $17 billion mentioned, but specifically China announced that it's going to restore market access for US beef and renewing a bunch of those export registrations from US beef processing facilities. Over 400 registrations had lapsed just this last year, and so China says that they're going to come and renew that. And I don't know. There's a lot of back and forth on that here to start the week, as to, was China restarting that right away, or was there an additional process that need to be had to get that going again?
Yeah, there's a little back and forth there on whether the registrations existed or not. And you did double check that and made sure that was going through, just as we know today, essentially. Obviously, um, you know, eh, any um, any extra demand we can get for our beef, I think, supports the American producer. And every so well, we don't have any beef to export anyway,
Hmm.
which is partly true, partly not. Yeah, we still want a strong domestic market. We still want, even if we have low supplies or high supplies, we want as much competition and as much market access as possible. That's just good for the producer moving forward. And then obviously, the more of that animal that we can use, just that increases the profitability um, for the processor to keep bidding for our cattle. So um, it's a win for sure.
Yeah.
Well, I mean, I guess I can't say for sure, but it's definitely um, looks like it's going to help.
Yeah. Yeah. This chart here just shows the ongoing decline of what we've been shipping to China. I actually only have it January through March. We have should be getting data here soon for the April as well. But I mean, this has just been an ongoing trend that we've been shipping less to China. Again, it hasn't really mattered because we've had declining supplies. But yeah, I mean, wanting to uh, maximize that carcass value, and a lot of what we export to Asia, not just China, but Asia in general, is they take a lot of those parts that we don't traditionally eat here in the US. So yeah, all about carcass value, wanting to make sure that we have that access moving forward. So yeah, I got that confirmation. It was a nice confirmation from the actual commerce ministry in China overnight that they are going to be re-upping those registrations that should be re-upped, and also looking at some expedited reviews of some other registrations. I know they had some kind of concerns with different residues, I think, that they were flagging, which we know they like to flag different things when they're trying to control the market, whether if it's from the US or even from Brazil. So but yeah, positive developments here moving forward as far as potential trade with China. And of course, you and I were talking about, can we is that we have that 10% additional tariff that's on imported goods on both the US and the China side of things. And there was talk, especially from China's commerce ministry, that both sides could be slashing that, which would make our exports also more attractive to China.
All good things, man.
Yep. Wanting to move on though here too is kind of moving beyond China and bringing things back here to the U.S. Of course, looking at the planting season, the crop progress report this week continued to show U.S. corn plantings and soybean plantings well ahead of average. 76% of that U.S. corn crop was planted as of this last Sunday. We see strong planting paces for the Eastern Corn Belt, the Midwest in general, near to above normal for a lot of these areas, minus Kansas and Michigan, which of course Michigan has been dealing with a lot of rain here to start the season, but kind of moving along ahead of pace here.
Yeah, moving right along. Caught right up. We were behind there for a little bit. Caught a few windows, um, and everything everything seems to be planted and for the most part getting rain. And most of my producers, I think, complaining about dryness. We've kind of been up through parts of the Dakotas, but even then, them are starting to get some rain. So for the most part, it looks like a decent start here for the crop.
Yeah, definitely. And when you look at the rain side of things, this is a 7-day map of precipitation percentiles that comes from Eric Snodgrass's page. Is that we've seen a decent amount of rain over just this last week for much of the Midwest. Yes, there are still these drier areas throughout much of the southern side of things. But there's going to be some backfilling a little bit, especially when it comes to like the Midwest and Delta regions, for those areas that haven't necessarily been getting precipitation. And we're talking some decent rain totals coming at least by Saturday for a lot of these areas.
Yeah, from what I've seen on his forecasting, it does seem like a lot of those areas are going to get a drain.
Yeah. Wrapping up things though on the grain discussion side of things is that this is not a perfect science. Whenever you think that you nailed something down in the market, things change. But looking at crop price seasonalities, I did want to ask you, Nick. We are kind of hitting our seasonal peak on the corn and soybean side of things, just on a historical basis for seasonality. I mean, is there still time to get some risk premium in here if things kind of take a little bit of a turn on the precipitation side of things?
Yeah, so right here at the beginning of when we would generally make a seasonal high, basically into May through June, especially through the middle of June, always kind of looking for that seasonal peak. And I think, having that in mind and then looking at some of the price action over the past couple weeks, um, 2 or 3 weeks, definitely has me, I guess, worried that the market has most of the bullish news or potential bullish news kind of priced in. And I think with the development of the domestic crop and kind of our production risk, um, kind of getting taken off the table, it does have me a little bit worried that we're putting in that high, have put in that high, or will very soon put in that high and start to work lower in the fall. Now that's just looking at um, fundamental items, right? So domestic production, domestic demand, and then South American production and South American demand, right? That supply and demand kind of base fundamental analysis there. The There are plenty of things outside of the market, some outside influence that um, could keep creating volatility, could add a level of support, you could say, and that's obviously energy and inflation. In kind of in a real simple way. You've got obviously energy trade flow disruptions, input trade flow disruptions, and just overall inflationary pressure. And we know what inflation, rising inflation does to commodities, generally speaking, right? So there's some outside influences that are supported, but I think even those outside issues, I mean, they could get those fires could get put out relatively quick in a sense, right? So I guess what I'm trying to say is, um, I would start moving towards a more defensive posture. Take a look at your marketing plan and whatever kind of um, percentages and volumes you're kind of supposed to be getting priced in this window. It could be time to start getting going on some of those. And obviously, the deeper we get into June, the more serious you need to take about wrapping that up.
All right, some things to consider. Wanting to move on to the livestock side of things. Of course, this Friday we have the USDA's next cattle on feed report. Thought the pre-report expectations were kind of interesting ahead of this one, as the average Bloomberg survey guess for specifically the placements is expected to be higher year over year. I'm not exactly sure what's driving those expectations. If there's just kind of an anticipation that we're gonna continue to push more calves into feedlots instead of holding them back. Um, it's kind of interesting to see that, not only is the wheat crop not looking very good in the plains, but pastureland conditions have also been taking a little bit of a hit here too, that, could be looking at a little bit of it limited available feed supplies here.
Yeah, it is going to be interesting to see how this one kind of pans out to the market. Um, the cattle market itself has definitely stalled, right? We've challenged last fall's highs, um, and we keep kind of chopping around in that zone, that liquidity zone, and really haven't resumed an uptrend here. Uh, I was really optimistic for a long time, the cattle market, and it still could run. Um, but I think you get not the most bullish cattle on feed coming up, and then I think with just the stalling, I guess you could say, of this uptrend and just kind of consolidation, and has me a little bit worried now. Does that necessarily mean the market has to tank necessarily? But it does seem, at least for now, the trend could be on hold, and we need some consolidation before we go one way or another.
Yeah, definitely going to be interesting to watch here. We'll probably have some more updates on, kind of what happens with the report next week and seeing what the trends are. Uh, if you want to actually make sure that you don't miss that. Of course, if you're listening to this on Spotify or watching it on YouTube, feel free to like, subscribe, And we've been putting these updates out for a long time, especially when we're hammering the wheat market for um, a few weeks at a time. That there's a lot of developments going on here moving forward. But I think that'll wrap up our discussion for this week. Again, lots to look forward to as we get through the spring, enter the summer months here moving forward. Lots to talk about, but we'll end it right there. I'm Dawson Schmidt.
I'm Nick Lawrence.
This has been Commodity Chat from Trader PhD.